Hey, everybody, and welcome back to Tax Sale Insiders. We're a podcast for successful tax lien and tax deed investing. And as always, I am excited to have our CEO here at Tax Sale Resources, Brian Seidensticker. Hey, Brian.
Hi, Rachel. Hi, everybody. Thanks
You're
for having me
back.
back.
Yeah, and
Can't stay away
yeah, no kidding.
for some reason. Huh?
In case you don't know who I am Rachel Seidensticker, and I am the COO over here at Tax Sale Resources. And what we try to do with Brian, most times, not every time, but most times, is take a deep dive into specific states. And today is no different. We're going to cover the state of Maryland. I was going to say I had a guess of what the Maryland's nickname was, but I can't remember it. So anyway, so Brian, glad to have you, and I think we'll just dig right in if you're cool with what it means to invest in Maryland tax liens, which is an important first step. So give us a general overview of what investors can expect in Maryland specifically.
Well, I think the Maryland is a complex state, right? Is probably the most or the best summary I can provide. It's definitely the rules, timelines, things you got to do is much more stringent in Maryland than many states. And if you miss doing things by certain times, then the likelihood of getting a deed at the end of the day, can be zero in many cases. So definitely not necessarily for beginners, right? Or you look at it as, well, if you're up for the challenge and you're willing to do your due diligence, right? And I definitely and always recommend speaking to an attorney familiar with the process in Maryland to make sure you know what you're doing. And then to add further complication, definitely become an expert on the county or counties you're going to go to, because it does vary from one county to the next. So not to scare people away from Maryland entirely, but it's definitely not for the faint of hearted.
I think that was a nice way of putting it, for sure. So, and then before we get into some of those details of why it's complicated, can you just tell everyone what we know about Maryland, why we feel like we can speak to the subject?
Well, we've done a lot of providing capital to investors in Maryland through our capital partnership programs, and so I guess we're a little more closer to it than some states. We have a great relationship with Jim Truitt, who was and Charles Gormley, both who we've interviewed about Maryland, right? And they definitely know what they're doing. From an attorney standpoint, and they provided great explanations. And if you haven't already watched that, it's a longer breakdown, but it goes into exactly how Maryland works, right? And I'll hit kind of the top level stuff. But if you get a chance and have the time, I will be the first to admit a lot of the interviews I do are you got to pin your eyes open, but you're going to learn a lot. So definitely check that out. So anyway, I should probably always throw out there, I'm not an attorney. This isn't legal advice. I'm not telling you exactly, what you should do, right? But I do feel pretty confident talking about how Maryland works and the complexity.
Great. Yeah. And we'll deep dive probably into some of that here as we get down. But so let's break out some of the key elements. When are tax sales usually held in Maryland first? Let's start there.
Well, I'd say they're normally May, June, right? That there's been some deviation from that, post COVID, but there's still the majority of them are in that same time frame, and so definitely plan on that. But they can come sporadically throughout the rest of the year. Usually, the early part of the year is or has been basically dead, right? So January through April is nothing. Most of it May, June, and then a few sporadic ones throughout the rest of the year.
Okay. And I know you touched on this because it's complicated, but from a general kind of, if you can speak to how the process works in Maryland specific, since it is a tax lien state, what does that look like?
Yeah. So so you go to the auction, right? And the procedures, right, the interest calculation and the requirements vary from one county to the next. That's kind of the hardest part, is just knowing how to do what you need to do in the counties. Now, at a general level, right, everything kind of follows the same. You go to the auction, you're going to bid a premium, right? You're going to have a 6-month redemption period. There's going to be things you need to do throughout that redemption period to ensure that you can proceed with a judgment process at the end of that 6-month process. And then you do have to go through a judgment process, before you get a deed. The nice thing about that judgment process, because it is a judicial foreclosure, you do have insurable title at the end of that process. You don't have to do a separate quiet title, assuming the case was done, correctly by an attorney that knows what they're doing. So everything kind of follows that general process. And then the nitty-gritty, like interest calculations, the requirements, timeline, all that kind of stuff can vary from one county to the next.
Okay. What return can investors expect then?
Well, the maximum is 18%. I believe that's governed by a statute in Maryland, but it varies across the board. I guess I know of some states that have like an 8% return. Some states, county that has an 8% return. I'm not aware. I'm sure they exist. Any county that has that's utilizing the full 18. I'm aware of a couple that have 16%. And then what that applies to, when it applies, and how it's calculated can vary from one county to the next as well. So, if you're doing your very high level research and you see this 18% return with 6-month redemption, that sounds awesome, right? That's similar to Texas, but that is not necessarily. Maryland is not Texas, and do not construe them for being remotely similar. And for the most part, counties aren't using that full return, and many are using, returns or rates much lower than that.
Yeah. And you touched on this already, but just knowing, I guess you mentioned the short redemption period, right? 6 months, but is there anything embedded in that 6 months that investors should be aware of?
Well, there's some, I don't know the names of them, but there's some notifications and things you need to do right before that. And you have very tight timelines. And I don't remember, check out the more detailed podcast that we did with Jim Truitt if you want to know the minute details of what it's called, when you got to do it. But it's one of those, if you don't do it in this tight timeline, you can't proceed with a judgment, right? So you just did all this work, made this investment, and now you've got a worthless piece of paper. So definitely know the nuances of that county before you get too far in. It's not in some states, buying liens, it's kind of a buy and forget for years on the redemption period. I'd say Arizona's probably one of those where you can buy and you can literally forget about it for 2 to 3 years before you start anything. Versus, Maryland is you got to know what you can forget for a few months, but you don't have much time, and then you've got to do certain things very quickly.
Yeah, that's understandable. Well, I guess let's just move forward and talk about the tools that Taxa Resources has to help people in Maryland. You mentioned our financing, our capital partnership programs. Can you go into like an in-depth review of the program as it could be used in Maryland, and what those terms could maybe look like, how it could be structured, and so on?
Yeah, our capital partnership program in Maryland is pretty unique to Maryland, and it's really as a result of the way the process works in Maryland. Because in most counties, you go and you're bidding a premium, but you're only required to bring a percentage of that premium. Now, the true calculation of what you have to bring at the sale or as of the sale is a fairly complex, problem, right? It's, how much you bid, what is that bid, related to assessed value, all these things. But I'm going to say roughly 20% of your total bid you got to bring to the auction or provide at the auction, the date of sale, right, to take ownership of that lien. The other remaining amount, we'll say, is roughly 80%, isn't due until you are actually going to take judgment on that particular lien. Now, what our program provides is really the help toward the tail end. The hardest part of building your model in Maryland historically has been, okay, how much can I actually buy, knowing some of it's going to redeem, and then how much am I going to need at the end? And if you're not really maximizing your return if you're only bidding, like if you have, I'll just use round numbers, $1 million. If you're only bidding up to $1 million because you have 200,000 for that initial amount, and the other 80%, the 800,000 for the end. The reality is a lot of that stuff's going to redeem, and so you don't need that full 800,000. So what is that right ratio? Well, that can vary immensely. So what our program does is we'll come in and say everything that gets to the end of redemption and is in judgment will help provide the capital for getting that deed at the end of the day. So you don't have to worry about that end of it. Go place the capital that you have on hand, right? Maximize your return there. The stuff that redeems, return some of that capital. Use your capital for those judgments as much as you can. And then when you technically run out, then come back to us and we can help you get the remaining. That's what our capital partnership program in Maryland is intended to be. And we've been, I'd like to say, very successful in helping the folks that are utilizing it there expand and optimize their model to its fullest potential. That particular process and capital partnership program is unique to Maryland because of how Maryland works. Our standard refinancing is certainly an option there if you have stuff that's already gone through judgment, right? You can certainly work with us, but the need in Maryland just wasn't the same as it is in many states, and so we've created the program specific to Maryland's needs. So anyway, that's kind of how we come into the picture, or can come into picture and help investors in Maryland.
Great. Well, and of course, we always can talk about our research platform and what it means to use research to basically take a look at Maryland sales. Unfortunately, we're at the time of year where there are no Maryland sales, but hopping in here and just looking at during that April to maybe even July, because some of the Maryland sales I know are pushed out, and being able to search on, that state specifically, pulling up the auctions and being able to then search auction by auction and all the parcels that have that are available in those auctions is certainly a way for investors to get started in Maryland as well. So.
We've been providing data there for 13 years, I think, in Maryland. So it's certainly something we're used to doing, and the research platform is excellent for figuring out which liens are great to buy. The management platform is set up to do all those crazy calculations in Maryland, so we can help on those two fronts as well.
Great. And then why don't you, I'm going to bring up our market analysis, Brian, and maybe spend some time just talking about how we have this data available for investors to make decisions before attending sales and what that means for them. We do have some solid 2022 data, and so I think it'd be good to show them what that looks like. So.
Yeah, and I'd say the market analysis report that we have today is a great tool to figure out the competition. The one piece of data that is missing from it that we're working on building into a future version of it is the redemption piece, and I'll explain why that matters here in a bit. But the first question that most folks have is, well, what is stuff selling for, right? With a 6-month redemption period, right? A penalty, a rate that is, fairly decent, or potential rate fairly decent. There's the bidding is pretty competitive, right? So the chance of actually obtaining, real estate in Maryland is fairly decent as well. And so you really need to know where are the areas and what are those bids, and that's what our our market analysis can help with, is what is stuff selling for relative to county value, we call it, right? So knowing, is stuff going for 10% of county value, or 20% of county value at the end of the day, 30%, right? That can help you determine where are the spots with maybe less competition, and so forth, right? So that part of the question we can certainly answer, right? And that definitely helps beginners, establish where should I go where I'm not going to get blown away at the auction, right? We can help there. Now, the other piece of the puzzle we don't help with is there is a component of that will tell you what your return is based on when things redeem. That is not the answer we provide in the market analysis today. So if you're really trying to figure out where can I go to get my best, return on my cash based on when stuff redeems and so forth, you won't get that answer, right? You can get partway there just knowing where the less competitive areas are, but you're not going to get where can I get my return from a lien standpoint. And if your approach is just the best return versus ownership, right? What you're searching for, the answer is different in both those cases. So we're pretty proud of the fact that we're doing something nobody else is doing as far as gathering that type of data. We've put together a version of that in our market analysis, and is pretty powerful in many states, and certainly could be a huge help in Maryland. But it's not the full answer in Maryland yet.
I like that.
Stay tuned.
Yeah, stay tuned. And also, the audience is seeing 2022, but if you're watching this in 2024, the 2023 data is going to be available soon. So, are there any specific legal considerations that our investors should keep in mind for Maryland specifically? And do you have any recommendations for our listeners on? I think you mentioned a couple, but maybe highlighting them again. A couple attorneys. We're not attorneys.
Well, yeah. I mean, I know Jim Truitt was a great resource in helping teach us initially how Maryland works. Jim's, I say in the middle of retirement. So by the time most folks listen to this, Jim's unfortunately not the person that you'll be able to reach out to. We've also talked to Charles Gormley, who could be a great resource. The key in Maryland is the steps that need to be done at every point have to be done by a licensed attorney in Maryland, right? In many states, you as an investor can do it yourself. In Maryland, that's not the case. So keep that in mind. And we always recommend engaging an attorney that's familiar with the state to at least understand the process. And in Maryland, it's even more strongly recommended because you have to engage an attorney at some point. So understanding, and having a great relationship with that attorney is paramount. In Maryland. So do that because they're going to need to be involved at every step of the way. And Maryland is one of the more complicated states, right? So definitely, please follow that advice and reach out to Charles. You might be able to reach out to Jim and get a recommendation from him as well. There's, I'm sure, many other Maryland attorneys that are familiar with tax sales. But definitely keep searching until you find one that is familiar with tax sales, because people can get turned upside down real quick by paying for somebody to learn it. They need to already know it.
That's true. That's a great point. Good point. Obviously, the hubbub is Tyler versus Hennepin County. Do you foresee anything that's going to come down the pike for the state of Maryland as far as that decision?
Well, I keep hitting on what my takeaway, right? I'm not an attorney, right? And I know this is going to be debated for many years. And so, but, my takeaway, from Tyler Hennepin is that states that generate or have a process that generates a surplus and that surplus is available to prior interested parties, right, the prior owner or mortgage holder, et cetera, I'd say are on the safe side, right? They're adhering, right, quote unquote, adhering to the intent of what the Tyler Hennepin case is supposed to say, right? So the states that don't generate a surplus or don't have a process for providing that surplus or making it available, I should say, to prior owners, may be at risk, right? Fortunately, Maryland is not one of those that, at least today, to my knowledge, is being at risk. Again, there's a lot changing and a lot going on in Tyler Hennepin, and we'll see what happens in the years to come. But I don't believe, from what I know today, that Maryland will be a state that is changing because of it.
Okay. I think that's just important for our users to know and our listeners, to understand. So I guess looking forward, I always, want to share also that we've got our tax sale summary from 2019 to 2022. You want to just take our listeners through what they can expect. This is a free blog, everyone, so they can certainly go out and check out state by state what the trends have been in the last several years.
Yeah, well, I think the key of what we're doing that I think many people don't realize is we're not just stopping at gathering the data on the properties. We're going to the next step of gathering the results of those auctions. And then, we've started gathering the redemption data from those auctions as well. And this is the first kind of dump of that data, right? To say, okay, based on the last few years, how is that technical difficulties of doing this stuff somewhat live, right? Mm-hmm. So the data component of it, right? This is our first, what's happened in the industry, not just in Maryland, but nationwide, right? As far as volume of properties going up for auction and the dollar value of those properties going up for auction. And Maryland is one where you can kind of see. Now, it's kind of an interesting time period to start this analysis because it's, I'll say, somewhat misleading in the fact that like 2020 is a fluke, right? Mm-hmm. With COVID, 21 and part of 22 to some respect is a little bit of an offset, so an increase due to the catch up, if you will, from 2020. So in general, what we've seen is a slight inflation or increase in volume the last couple of years due to the catch up from 2020, but overall not really seeing a huge increase or decrease compared to the data that we were able to look at pre-COVID. So it's the industry kind of is even Steven, if you will. But if you want to know what volume is there for investors looking to get into Maryland, at least you can go check that out for now.
Great. All right. Well, thanks, Brian. Do you have any points of interest to leave investors on as we close up our chat about Maryland today?
No, I think as I mentioned in the beginning, is Maryland is definitely one with lots of nuances, right? And definitely not only from the state and the process, but definitely from one county to the next. Definitely, establish a great relationship with an attorney familiar with the sale process there. They're going to be your best friend all the way through the process. But beyond that, Maryland is one where the redemption period is short enough. I mean, there's still a decent return to be had in Maryland if you are searching for that.
Great. Well, as always, love having you on here. I think our audience appreciates your insight, and thanks for popping in and you being in the hot seat versus our other experts that you're usually interviewing. So thanks for letting me drill you. To all of you out there, happy investing and thanks for joining us.
Yep. Good luck, everybody.